All right, good morning. Welcome. It's another month, another week, another day, another dollar, as they will say. And in this video, I'll be making a very short weekly outlook video, what I'm expecting in this coming week, and yeah, the rest of the year. We're finally here in the end. It's been one weird year for me personally. Not really sure what to make of it, but let's go over what has happened throughout the course of the year and in this past month. So of course, we see the January 2024 opening, which was somewhere here, I believe, right there. This was the opening price for the month, for the year actually. We opened up in the year, traded a little bit higher, teased those relative equal highs, the buy side liquidity, while generating new relative equal highs over there, and over there. So we went down back into the opening price for the year, took out this sell side liquidity, and failed to take out this one. This is actually the yearly BC. This is the yearly buy side imbalance slash weekly sell side liquidity. So I was expecting price to tap into this yearly imbalance, give us a shifting structure maybe on the daily or a daily CSD for us to take this higher to that buy side liquidity, the drawn liquidity for the rest of the year. But as we can see, price didn't do that. Now that we have finally reached the objective, I am basically neutral on the dollar for the rest of the week, but I have two things in mind. Firstly, we are trading currently inside of this inefficiency. When we cut this inefficiency in half, we can see that's the consequent encroachment right there. So I could potentially see us going and clearing this buy side liquidity and tapping into this consequent encroachment as the next target. And we do have a weekly imbalance that was just created right here. If we can see, we just created a weekly imbalance right there, and price could respect this weekly imbalance to continue higher. Now the thing is, I am a bit on the edge. I'm experiencing a bit of a 50-50 position now, because obviously we've cleared the drawn liquidity and I don't expect much to happen in price. I do still take higher time frame inefficiencies as a drawn liquidity. For example, the yearly imbalance that we have right there, that sell side liquidity, is still something I find enticing. So it'll be nice if maybe the rest of next year, or after Q1 of next year, we could trade into that yearly imbalance. For those that don't know what yearly imbalance I'm talking about, I mean this one over here, this yearly fair value gap, this yearly buy side imbalance, sell side inefficiency right here. So that's my target, that's my drawn liquidity, and that would be a clear, easy drawn liquidity if we can start getting some bearish price action. Now, what could give us some bearish price action right now? We already mentioned how this buy side imbalance could push us higher. So if you're following the typical making ends meet model, and you are looking for an entry within this gap, and we have an SMT with euro because euro has not tapped into its weekly fair value gap, you'd be looking for the 4-hour chart to give you a change in the state of delivery, which it has. We have closed above a down close candle right there. This down close candle over here, the wick to body area, could be a potential area to be buying the dollar, right, to continue pushing dollar higher. The second reason why we have bullish dollar is because of what Trump was posting on Twitter this weekend, which obviously gave dollar the strength that it got overnight over the weekend. Pasting a snippet of the tweet in, it says this. Let's go over it quickly. It's not a long tweet. The idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over. So firstly, he's going against the BRICS nations. For those that don't know, the BRICS are a few countries that actually have resources and are trying to come together as one currency as well, which is trying to take over the US dollar. Now that Donald Trump has taken presidency over the United States of America, he's attempting to say the dollar will remain forever strong and will remain stronger than the BRICS nations, right? So he says that the standing aside and watching the BRICS takeover is over. We require commitment from these countries that they will neither create new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. They can go find another sucker. There is no chance that BRICS will replace the US dollar in international trade, and any country that tries should wave goodbye to America. So basically, he's literally starting a war that's unnecessary. He's saying that if you decide to go start your own currency, if you decide to go join BRICS, if you decide to try and take over the US dollar and the US economy, he is personally going to make sure that the tariffs will be so high and basically 100%. Basically, you cannot deal with the US economy, the US as a nation at all, in any way, shape, or form. That's basically what he's trying to put. He's trying to put a law, a rule, or some sort of punishment for going and trying to start your own thing. So this is very interesting. This is very raw, and it's the only thing that pushed the dollar, as we can see when we opened up, literally just had a parabolic move to the upside. No hesitation, no looking back. And even now, we are still making new highs. So very direct statements to really support bullish dollar. So us bouncing from this weekly fair value gap is seeming even more realistic, right? So there's that side of the picture, but there's another side of the picture that I want to paint for you guys. So this is not a definitive directional bias or decision. Remember, I started off by saying that I'm neutral on the dollar now that we've cleared the buy side liquidity that I was hoping would be kept for later. But now, watch what has happened. We've basically souped these highs. We've tried to soup these highs, or we've swept the highs, or whatever you want to call it, because, well, we swept the high that's inside of an imbalance. We also swept this high right here, over there, right? So we've swept buy side liquidity. In my opinion, what's next? We go back into the 50% of the range, because this is clearly a range, right? This is the range high, that's the range low. We're not trending yet, so we can't go as extreme as the weekly BC, but we can at least measure the range and consider this to be a range, right? When we measure from the high to the low, where do we see the 50%? Right there, where we have this swing low residing. We have a swing low right there. I'm trying to zoom in so that you guys can see. We have a low. Looking to the left, we have a higher low. Looking to the right, we have a higher low. So this makes this to be a swing low right there. So that sell side liquidity at the 50% of this range is very sensitive, in my opinion. So this is me now looking from a technical point of view, forgetting what Donald Trump is saying over the weekend, forgetting what structure is telling me, forgetting the fact that we have a bullish imbalance here that could support higher prices. Everything is pointing at higher prices, but now I'm looking at a different thing. The fact that we took the buy side liquidity up there, the one up there, and now we had an immediate shift to the downside. For the first time in how many weeks? In 1, 2, 3, 4, 5, 6, 7, 8 weeks. In the first time in the last 2 months, we actually now finally got a bearish week last week. For the first time in 2 months. So this for me is not something taken lightly. So I'm having another bias. I'm having a possible bias that we actually could have a change in the state of delivery already. This bearish close below the previous one could be a potential bearish order block. Let's remove this ad. It's annoying now. That could be a potential bearish order block right there, right? So that could be an area to watch to sell the dollar from. For me, I know technically for me to decide on which direction we are going, I should wait for this imbalance over here, this bullish imbalance that's the only PD area that I see supporting higher prices, right? I should wait for us to disrespect this bullish imbalance. I should wait to see us close below this area. If we close below this area, keeping in mind that it's NFP week and all that, if we close below this BC, then we could look for continuation lower to this swing low, which is the 50% of the range, the entirety of this December. So that's my bias for the week, and that's my bias for the month. I'm looking for this 50% of this December, but I'm waiting for this weekly close because that will be very sensitive to me. If we somehow trade to the body of this order block, let me remove the BC on the weekly perspective. If we somehow trade to the body right there, I might consider a position on a lower time frame to just sell the dollar or buy the foreign currencies, depending on the one that might be more enticing. So if we get something like that, I would definitely look for positions on a lower time frame to sell the dollar. But I am standing towards more bearishness on DXY than bullishness right now. I'm not saying this will remain. I would obviously wait for the weekly candle to continue creating itself, keeping in mind we don't have a tail or a bottom week, depending on what you want to call it. We don't have a tail yet for this week, so I'm still technically based, even though we have sentimental and even though we have fundamental, which is Donald Trump trying to say we're going to give 100% tariffs to the rest of the world that stands against the US dollar. Yeah, I hear all that, but my mind is still focusing on the technicals, right? And the technicals are telling me that we are probably gonna get lower dollar. If we don't get the lower dollar this week, if the weekly candle closes higher after NFP, respecting this BC, then we can look for that consequent encroachment of this massive imbalance right there, right, as the next target going into next week. So let's wait for more information. Let's wait for data to be given, then we can decide more accurately what direction we want to trade. I don't have to go over every single currency pair because it's all the same thing, just the opposite direction. Looking at NZD/USD, I was bearish last week. I was looking for us to trade to that sell side liquidity, but price did not fully respect it. We did respect the imbalance here on the daily time frame right there. We respected it, but we didn't continue to take out that sell side liquidity. So we might take out that sell side liquidity if the dollar is actually bullish. We might end up just making a relative equal low to push up, and if the dollar ends up being bearish, coming back to the 50% of the range or in premium of this range, then we come to continue later, maybe next year. The same applies to GBPUSD. I was bearish last week, looking at this imbalance right there. I was hoping for a continuation lower to that sell side liquidity, but now you can see that we are looking a little more bullish. And if the dollar ends up being bearish, that could work in our favor, because looking here on the daily time frame, we already have a breaker that formed, right? We have a low, a high, a lower low, then a higher high, right? And we actually closed above this high, the previous swing high. We actually closed above it right there. So that's a typical ICT breaker. If you want the whole region, I prefer to measure the low to the high. I know that it's technically the last up close candles, but if you measure the whole range, this is the whole breaker. Within the breaker, we have an imbalance right there, a bullish one, and we have a bearish one to the left of it, making it to be a BPR. So we have this, and we also have this over there. I'm not going to draw those lines, but you can really see that this area, these purple area lines or area, this discounted area here, basically after taking the previous daily lows, we could see a possible reversal from here. First target is the daily buy side liquidity, or the daily CB over here, and of course going through that, if you really get animated, if the dollar decides to actually trade into the yearly fair value gap, then we could go all the way to this buy side liquidity. So yeah, I'm just monitoring. If this gives us structure on a lower time frame, we could play with it, and we could, yeah, work with it. Same goes with euro. I don't need to go over every single thing because I believe it was all clear. Euro, this is the SMT that I was talking about. Euro failed to tap into its weekly CB while the dollar did. So the dollar tapped into this, and we're currently respecting it, but euro has not tapped into that yet. So that's something to watch. Also, GBP has already tapped into its own as well, while euro has not. So that could be an indicator for lower pound, lower euro, and higher dollar. It could be an internal range liquidity from this gap to the external range liquidity right there. We have our SMT already. We already have a 4-hour shift and 4-hour change in the state of delivery, and we can just look for a continuation to the sell side, right? I'm not scrapping that out. I'm still 50-50, and I'm waiting for price to develop. So yeah, same goes with AUD. I'm not gonna go through the different time frames and everything. As long as I've already given it more detailed analysis on dollar, do the opposite for euro, pound, Aussie, and Kiwi. Moving to UJ, the same thing actually, because, well, yeah, the same thing. We had a very bearish week last week, making me concerned, making me think, is that a change in the state of delivery? Are we possibly gonna push lower? But keep in mind that this is yen, and the yen pairs are just full of randomness. Anything can happen anytime, so nothing to really stand by. So yeah, just something to watch. Yeah, card is not clean right now at all. Anyway, let's move on to the currencies. So we're starting off with Russell. Russell took the buy side liquidity that I've been targeting for so long, but I never actually got to participate in it because last week we got a last 2 weeks we got the rejection that I wanted right here, but I was not home to get in on this move. And then last week I wanted to play a continuation move to that buy side liquidity, but we can see we just opened up and rallied to the buy side without any retracements whatsoever. Literally, this was last week's price action. We opened up right there with a huge gap, and then cleared the buy side, came back into the gap again, the NWOG, and then we just consolidated the whole week. This is the whole week's price action last week. So consolidation, small range week, after getting a huge expansion, big range week right there. So yeah, Russell, we have cleared the buy side liquidity again, making me neutral. If we are going to continue being bullish, then all down close candles should support higher prices. So if we start looking at things like this last down close candle, we have not closed above it yet, but we should start using it to push up more. Last week has already touched it when we filled up the gap, but this week I don't mind it going a little bit deeper, clearing the previous weekly low, getting a lower time frame change in the state of delivery. Then we can continue higher to the new buy side liquidity that's been created, which is right there. If you don't want to target these short-term targets, you can always zoom out, because I believe we still have other areas. Oh, we actually don't have any other area. I thought we had other areas to target. So we are trading at the all-time high finally on Russell. That's impressive. For the first time in how long have we gotten to this high? The last time we were this high was in November 2021. So we actually made all-time highs last week, which is really cool. So a lot of liquidity up here, heavy retracements are possible. But overall, looking at structure, this becomes a proportion block. if and when we close above it. So this was an order block, right? The reason I wanted to enter here in the first place. Now we supported off of that order block, creating a new order block, the previous down close candle, but it's not yet an order block until we close above the swing high. That swing high right there. We've not closed above it. When we close above it, this becomes a proportion block. A proportion block is very sensitive. When price taps it, it should just run without hesitation, without looking back. So let's see how this week plays out. Let's see if we will get some sort of lower time frame entries, maybe something on the 1 hour that would look solid to buy, to continue buying Russell. If not, we could look for us to trade down to these relative equal lows after getting some sort of shift here or something that we can work with. So far, I don't see anything clean, especially this being the previous week's price action. Going on to YM, which is the Dow, we have basically the same thing. We're currently trading at all-time highs. We're trading at all-time highs. I don't see much. We are closing aggressively. So remember how we were looking at Russell and how we were saying that it's not yet a proportion block? Looking at this, we can clearly now see what I meant. So this is the last previous down close candle, right? Another reason why I wanted to buy this BC, because it's within an order block within another high time frame PDRA. So it's an order block with a fair value gap on a lower time frame. It's actually a breaker, and now look what has happened. We have now closed above this down close candle. Looking at this down close candle, right, that's the high, the yellow line. When you look at it, right, we can clearly see that we have now closed above that yellow line. That makes me now consider this order block, the body to wick to body, because we have a long wick, the wick to body to be very sensitive for continuation higher. So if we, let me actually just draw a rectangle instead. So we do something like this and pull this out in time. We have that. So if we're going to continue higher, I expect us to continue higher within that area. Basically, that's all I'm trying to say. And looking at the previous weekly low, almost looks like no tail or a wickless candle. It's not really the case, but almost looks like. And we actually have a liquidity void in between. So being bearish up until that point, up until the previous weekly low, is not something too unrealistic. It's not something too bizarre to be doing, to be targeting. So yeah, on the looking at this daily time frame, I can actually see myself being short-term bearish up until that point. This liquidity void right there. So it's rare to get them, but they're there from time to time. Let me actually label this properly, because I didn't expect this. I didn't actually see it when I was looking through my charts. By the way, I don't prepare for these weekly outlook videos, but I just go through it and I see things that I see. So, but I do from time to time look through my charts, you know, without any much analysis, but I do look. So we have the liquidity void, and I see that to be a possible target for intraday traders. Looking at the 4 hour, actually even looking at the 1 hour. Let's go down to the 1 hour. We realign our lines, make sure it's accurate. Right there, we got a liquidity sweep at the highs already. So I could see myself playing a simple 2022 model here. We got the liquidity sweep. The next thing we need is the change in the state of delivery, or a breaker, or an order block. So let's label this as our sweeping liquidity at the all-time highs. It's always a tricky thing to be trading reversals at all-time highs. Yep, that's basically what you're trading right now if you decide to take this trade. The next thing I want to see is a closure below a low. For me, it doesn't even have to be a low, it just has to be these bodies right there. But let's just say we close below this swing low, right? We close below that swing low. If and when we retest this breaker, hopefully has a fair value gap right here somewhere then that could be a continuation sells to that sell side liquidity and that liquidity void that we saw from the high time frame. So this could be a play on YM, but I'll need more structure. On the 15 minutes, if I'm gonna take something like this within 1 day, I'll be looking for a double purge. So say we sweep a low, then we go ahead and sweep a high, then I would look for sells to the low. So say something like this, we have a low right there, and let's say something like this, we have a high right there. It doesn't have to be the specific high that I'm pointing out or the specific lows that I'm pointing out. It could just create new lows and new highs after this video. So yeah, I'm looking for this sell side liquidity to be swept, or a sell side liquidity to be swept, a buy side liquidity to be then swept. It could even just be these highs right there, but some sort of high to be swept, and then I could look for sells, either by a breaker or even a sell stop or anything like that to continue lower, right? That's for intraday, but I just covered for intra-week as well. For you guys that are trading from the hourly or 4-hourly chart, even on the 4-hourly chart, we can also see the breaker, those equal bodies there, right there. The equal body lows close below it, I'll consider that to be an order block on a 4-hour chart. So then we can look to target that liquidity void. That's my view on the Dow. Let's move on to NASDAQ and ES. NASDAQ showing us bullish intentions, a very lethargic one, a very disgusting looking price action. We got SMTs there, we got a push down. I thought this new week opening gap from last week could continue lower to that sell side liquidity because we have all these uncleared lows. A swing low there, a swing low there, a swing low there, a swing low there. We keep taking internal lows here, but we don't really push the way that we don't really take liquidity the way I want. Yes, we take that liquidity. Yes, we take this liquidity, and yes, we rejected away from it. But when we rejected away from it, we didn't do so aggressively. The same goes with every other time that we've done that. We've taken liquidity here, right? We've taken some sort of internal liquidity over there, and you'd expect us to reject aggressively and push up from there. For example, using this order block, because this is a high probability order block, right, with a fair value gap that took liquidity. So let's just push up, but then look what happens. We push down so low, disrespecting the BC, coming so close that you think that the sell side is inevitable, but then we push up again. We come back again right there, push so low without taking liquidity, then push up again. So yes, we are pushing up, but in a very disgusting manner. It's not really trend. It's not really a trend. A trending price action. It's not really an easy flowing price action. So that makes me not like this, what we've been getting the last few weeks, and actually I feel like it's almost the entirety of November. Like, I mean, I know that the beginning was here, we chopped and fell, but then this is most of November. We didn't really get anything nice, in my opinion. You'd have to hunt for intraday positions for something cleaner. But right now, if we are bullish, looking at the 4-hour, we should use the previous week opening gap with this 4-hour imbalance to continue higher, right? We have the 4-hour BC residing right there, over there. So we took liquidity firstly. Took liquidity, pushed up, market structure shift, we closed above that high, fair value gap. Simple 2022 model could take us to the previous weekly high, which is right there. We could see price going to the previous weekly high there. So yeah, I'm not sure. I'm not really liking this, and we have the all-time high up there. But yeah, one step at a time. I would like to see clean price action. I'd like to see us tap the previous week opening gap with the fair value gap. I would like to see us push up away from that area, maybe close above this down close candle right there. If we close above it, that becomes a bullish order block, right? And then I can look for buys from the order block. So yeah, that's all I'm hoping for and wanting to see on NASDAQ. Then finally on ES, similar stuff, just that we're close to the all-time high. Oh yeah, we've taken the all-time high already. Actually, we took the all-time high last week on Friday. So yeah, if we're continuing higher, we should use this BC to continue higher. If we are not and somehow coming lower, then we do have higher time frame targets like those equal lows right there, double bottoms, and all these uncleared lows could be run through like butter and a hot knife. So yeah, that's all. I don't believe I have anything else left to share with you guys. The other thing that I'm eyeing on the side is oil for the remainder of the week and the remainder of the month. The problem is that oil has been too lethargic for my liking. I'm looking for that sell side liquidity down there, and going through that we have this sell side liquidity, but look how many weeks, days, or whatever you can call it, that we've been waiting for, and it hasn't been giving me the price action I want. We haven't been getting what I wanted. So I don't know, I'm still bearish on oil. I still want to see us reach the 66.3 level, as I just delineated, or the 66 flat psychological level. I would like to see the 66 flat psychological level, but as you can see, it's not really giving us anything to work with. Well, not me, not yet. Maybe it's for some other people out there that are seeing some sort of clean price action in this. For me, I'm not seeing anything yet, even though I am bearish and I'm looking for that sell side to be tagged at the 66 area. So for now, that's all I have. Good luck and good trading.